Welcome back. Artificial intelligence advancements push some large cap tech stocks to new highs, of course, in 2024. It was a big market story. Our next guest argues that AI will continue to foster productivity and innovation this year. However, 2025 is not without its challenges. Joining us from San Francisco to talk more about the sector, Mark Mahaney, Senior Managing Director at Evercore ISI and an analyst in the space. Mark, thanks a lot for joining us. How much room is there for the AI stocks to continue to advance after a couple of very strong years?
Well, you're right. We've had, Paul, you're right. We've had very strong years. We're in the middle of a bull market that began in the middle of 22 when interest rates stopped soaring. And then fundamentals, macro fundamentals at the margin kind of improved. Things came in better than feared. And then on top of that, you've had this AI investment cycle. And it looks like some of the leading companies are actually seeing very good, what I call ROAI, or return on invested capital, return on AI. And you're seeing that in their financials. You're seeing record high margins. I think this is a trend that's going to keep going for a while. Now, the stock setup isn't that constructive going into this year. I wouldn't expect the outperformance that we saw the last 2 years. I think valuations are reasonable. I don't necessarily think they're excessive, but there's not much dislocation, and you always want to look for dislocation. So I'm giving you a broad, nuanced answer. I think there are a couple of plays that are interesting in the space right now. And the one stock that I particularly like is Uber, because it's really the only high quality large cap internet stock I look at that I think is dislocated. So that's our top pick.
Okay, talk more about Uber, and we'll put up a 1-year stock graph, and investors and viewers will see what you're talking about when you use the phrase dislocated. I believe you are referring to its low share price compared to where it's been over the past year or so.
Yeah, that's right, Paul. We're 20 to 30% correction. It's done that over the last 2 months over robo-taxi concerns, which are very legitimate, and a perceived slowdown in rideshare bookings in the back half of 24 going into 25, which is somewhat related, but also somewhat separate from the robo-taxi issue. So both of those have been overhangs, and our view is that Uber, especially at 60, now we've nicely rallied already off of that, but this is just a couple of days. But especially in the kind of the low 60s, mid 60s, I think there's a significant amount of upside here. I think they can be a long-term winner or beneficiary from robo-taxis. I think when we use rideshare networks in the future, I think one of the options will be robo-taxis, and Uber Black, Uber XL, Uber Comfort, Uber Green, Uber Robo. And if I'm right with that thesis and the data points over the next 6 to 12 months start confirming that, I think there's an enormous amount of upside in Uber stock. I think it's maybe the cheapest high quality, large cap tech stock on a growth adjusted basis. So that's why it's our number one pick. It's dislocated, the stock's cheap, and we think there's an interesting change in the narrative that can happen in the next 6 to 12 months related to robo-taxis.
And your price target there is $120 US, so you see the stock very nearly doubling over what period, the 12 to 18 months?
12 months. And I know that sounds, excessive. It sounds egregious. It sounds really high. These stocks can move and look at you could see it in the chart. There's been some pretty wide swings in this stock over the last 12 months, and especially if you go over the last couple of years. I just look at an asset like this that I think can trade at 25 times free cash flow. You do that and you get to that kind of 120 range. And for a company that I think can grow free cash flow 30% plus, maybe as high as 40%, yeah, this stock could trade at 25 if you address the overhangs.
Okay, let's go to Amazon. You have a $260 price target on shares of Amazon.
Yeah, not a dramatic amount of upside from here. There's not a 50% upside. That's a 12-month price target. But, we want to continue to stick with the name. It's sort of what I call a quality compounder. I think the multiple can hold, maybe goes up a little bit. And I just think the stock goes up because the earnings and the free cash flow go up 20, 25%. So the stock moves up. to that level. What's going to be new this year about Amazon? I think we're going to get a little bit more of the same in terms of the ramping margins that we saw, operating margins, free cash flow margins that we saw last year. I think we could see some acceleration in ad revenue growth. I think we could see some acceleration in AWS or cloud revenue, cloud compute growth for the company. And the advantage for Amazon and for shareholders is I just mentioned two areas that are going to accelerate in growth, but they're also two of the highest margin businesses that the company has. I call that a really nice positive mix shift. So yeah, I want to stick with Amazon. I want to stay long it.
Okay, let's finish with Expedia Group. That stock rallied in a big way in the second half of 2024, and you think there's more to go there?
Yes, we upgraded this about a year ago, and it's always been the out player, whatever the right expression is, in amongst the online travel agencies, Booking.com, Expedia, and Airbnb. The execution over at Expedia has been very checkered, very mixed over the years. I think we have a bit of a turnaround story. I don't think this is at all reflected in valuation. It trades at 13 times earnings. Booking is at 24 times earnings. Airbnb's at 30 times earnings. And I think their growth rates, as I've seen them converge over the last 12 months, I've seen that. Now I'm waiting for the multiples to converge. And I think it'll happen with Expedia's multiple kind of continuing to rise higher. They need to improve two of their assets, Vrbo, their vacation rental by owners asset, and their hotels.com asset. If they can get both of those back to solid growth, I think you're going to see upside to street estimates, and I think you're going to see ongoing re-rating in the stock. They pay a dividend, generate a lot of cash. The online travel sector as a whole is just, I think, is a very good sector fundamentally for investors to be in. Here's the one that's really most lagged, and it's reflected in its valuation. I like Expedia.